Hello everyone and welcome back to another episode of the Globe Talks of Traders series. I'm your host Sunlight, and today I'm delighted to welcome onto the show Christopher Newhouse, crypto derivatives trader at GSR. So what you want to find out about personal and institutional trading strategies, his thoughts on the current market pulse, and also what he thinks may be the biggest trends of the coming year. And now onto the interview. The Globe mobile app is now live on the Apple App Store. Trade anytime, anywhere, with any asset as collateral. Stay connected with all your positions on the go. Globe, exchange everything, now even easier. So, hey Chris, let's jump right into things. So could you tell us a bit about yourself and how you came to be a crypto derivatives trader for, one of the largest crypto platforms out there?
Sure. Yeah, I can give a little bit of a background about myself personally, like my educational background, and then a little bit of a professional background as well. So I'm a recent graduate from Georgia Tech. I was the founder of our quantitative trading club. We focused a lot on options and trading education at the institutional and market making level. So we focused a lot more on the probability and statistics and how to use math and programming to create systematic strategies rather than emphasizing more on the technical analysis or the fundamental styles of trading. It was a club that really focused on helping new students learn about an alternative career path for those who want to leverage like the math and the computer science skills in like a very fast-paced entrepreneurial environment with challenging work. That's what I think trading really is. That club also recently finalized a partnership with Citadel, so they're doing great over there. I was also a founder of our blockchain club at Georgia Tech, which focused on similar things. So helping students learn more about opportunities and skill sets necessary to succeed in crypto. So whether that be in a business-oriented role or a blockchain developer role, we had several different sectors in that club, and myself and a couple of others designed like an educational course or curriculum to kind of help others learn more about Web3 and crypto. They recently had like a very successful conference that was hosted in Atlanta and had speakers coming from a bunch of different well-known crypto firms as well. To kind of finalize the educational stuff. So I was also the head of research for our venture capital club at Georgia Tech and specifically focused on crypto and Web3 opportunities. The club now has like a small fund for angel investments, and they focus on everything from traditional to Web3 opportunities. So if there's anything to do with crypto at Georgia Tech, I felt like I had to get involved. So I was always involved in anything crypto at Tech. Professional experience. So I started out at Genesis Trading as an intern. I was learning under Josh Lem. So I was focusing on the crypto options and derivatives markets. I had the opportunity to continue my internship like through the final year of my university, focusing more so on the research side of things. So I was working with Noel Aitchison, where I specialized in providing insights in the derivatives and options markets. And then after finishing up with that, graduated in May 2022. And then I had a couple of offers from other firms, but I ended up choosing GSR to start. So I'm one of two graduate traders and the only graduate hired in New York City and for our New York City office. And I help guide the development of our biweekly OTC trading commentary that focuses on macro, rates, DeFi, altcoins, and options. And then I also write options and volatility-centric insights for Paradigm Trading's platform and Deribit on the side. My role here at GSR is as a trading and research analyst on the OTC trading team. And I specifically am helping institutions trade spot and options for a variety of different tokens.
Awesome. Well, congratulations on being like one of the two of, I'm sure, many applicants.
Yes, yes.
Yeah. So you were talking about how you had like other offers. Why did you choose GSR then?
Got it. Yeah. So GSR specifically, I felt like GSR was probably going to be the most crypto native, most crypto involved with like DeFi projects, Web3. I'm a true believer in Web3 technology and cryptocurrency. So if I was going, and I also ended up going into crypto right out of university. So I had no traditional finance background, no traditional finance internships, nothing like that. I went right into crypto, and I thought the best place to do that was going to be GSR, specifically because they're a token market maker for a lot of the DeFi projects. They have venture investments in a lot of the DeFi things. I thought GSR was going to be the best opportunity to get full exposure to what crypto would be as an industry. So I ended up choosing GSR over a lot of the other offers as well.
Oh, amazing. Yeah. So could you actually talk us through about, the key values at GSR and what kind of sets you apart from other market makers and trading firms?
Sure. Yeah. So GSR specifically, I like to use the term ecosystem partner. And that's kind of just our core lines of businesses are token market making, OTC trading, and venture investing. So as an ecosystem partner, I like to think of us as not just a trading firm, but also helping projects in the environment and in the space grow as well. The biggest thing that separates us from our competitors is probably the emphasis on the altcoin markets. So we're also a very white glove, client-centric firm that's focusing on providing the best experience possible to our clients and our investments projects, whether that be on the market making side of the business or whether that be specifically on the OTC side, which is my role. So I'm quoting spot and options for clients in the altcoins and in the kind of majors, Bitcoin and Ethereum as well. So during the volatility, like post FTX, we were still up and actively quoting for any tokens that had tradable volumes. Our exchange connectivity and quantitative HFT like background is definitely one of the massive edges that GSR has. And I'd say that the technology centric focus here is also a huge deal. So we're a global team, but something that really sets us apart is definitely the dozens of technology hires we have and the emphasis we have on technology and client services. And then as a product differentiator, I think our focus on the altcoin markets is something unique to us as well.
Awesome. Yeah. And so would you say with altcoins, there's, a little bit more risk involved?
Yeah, I would definitely say that there's a lot more risk involved in the kind of altcoin markets in terms of if you're speculating on direction. But GSR's kind of core business is to be a market maker for these tokens. So we don't actually take too much of a directional view or bias on these tokens. Sure, we have some venture investments, and we obviously hope the venture investments do well and the tokens go up then. But our main line of business and bread and butter is definitely the token market making. And in the market making kind of business, we try to stay market neutral as much as possible. But I do think that a lot of the altcoins, if you're looking for something a little bit more volatile with a little bit more potential for returns, not financial advice or anything, but I do think that, the altcoins do definitely have a lot more opportunities for some of those, because I think specifically in the altcoin markets compared to Bitcoin and Ethereum, crypto as a whole is a very narrative-driven trading environment. I think there's so many opportunities for event-based trades. We saw a lot of stuff for the majors, the Bitcoin halvening stuff, the Ethereum merge. These were big kind of narratives that people were trading, but also there are like very specific ecosystem project events that happen, whether that be a DAO vote or a token proposal or some sort of market-making proposal through a DAO or some sort of, DeFi exploit, things like that. I think that there are a lot more event-based trades that you can do in the altcoin markets that you can do in Bitcoin and Ethereum. But I also think that for Bitcoin and Ethereum, those are the main proxies that a lot of kind of high net worth individuals and hedge funds, asset managers are using for a macro-driven like trade thesis.
Awesome. So what do you personally use when, what are your favorite trading strategies when trading for GSR?
Got it. Yeah. So for GSR specifically, we try not to take as much we try not to do very much prop trading at all. It's very much so focused on market making. So for me, it's not really like a GSR specific strategy. It's more so, kind of just talking about what's the difference between how an institutional trader thinks versus how a retail focused trader kind of thinks. So one of the bigger differences between institutional traders and retail traders from what I've kind of experienced is our emphasis on hedging our exposure and then trying to remain market neutral, delta neutral. We try to stay away from taking too much of a view on direction. And the way that we're able to do that is these institutional firms have the capital to kind of do that, constant delta hedging and managing their risk in a much more dynamic way. So, delta hedging, we're pretty much just rebalancing our underlying exposure after directional moves. Whereas most retail investors don't really have the opportunity to do that, right? So for example, if we took down 25 lots of, let's say, an at the money Bitcoin option, GSR would kind of to be delta neutral and kind of, not have too much specific bias towards the direction of the market. We would for an at the money, we'd buy or sell, 12 and a half Bitcoin on top of that position, or 1.25 or something like that. But yeah, so retail traders can't really do that because obviously 12 and a half Bitcoin is 200K. But yeah, for me specifically, whenever I trade as a retail customer in the options market, this is specific for me. So I usually am forced to kind of take on a directional view because I don't have the capital to kind of do that, gamma scalping, the delta neutral kind of trades like that. And then I think if you wanted to use a retail focused strategy that maybe gave you less directional exposure, like a straddle or something like that, it can get very expensive. But yeah, some of the bigger trades I had whenever I was doing a lot of retail trading, though, they were all very news-based, event-driven trades. And I would say that they're more like a discretionary view of how the events or news would impact the market. And I'd also argue that that discretionary style of trading isn't really viewed as, I guess, as positively or as consistent as some of the more systematic, quantitative trading strategies. But I've just always enjoyed, I've always been someone who enjoys the interaction between all the different asset classes and learning more about how decisions in a foreign banking policy overseas might impact the markets in the US, stuff like that. I just really enjoyed actually trading and getting involved in the markets than kind of, seeping through a bunch of data and not really understanding the correlations or the connections between that and a financial markets kind of tradable opportunity. Like my favorite, I'd say that my favorite strategies that whenever I feel strongly about something are honestly just going to be like just buying outright calls or puts. But whenever volatility is pretty high and buying options expensive, I might sometimes look to put on like a debit spread or something like that. So buying and selling one option while still taking a directional view on the market up to a point. Yeah.
Yeah, awesome. So everything you've kind of said up till now about your personal trading, it seems like it's kind of past tense. So like right now, obviously we're in a very, okay, iffy, for lack of a better word, market situation. How are you dealing with this right now?
Yeah. So I honestly just take it one day at a time. I'd say that I'm going to say that we're probably in a bear market right now. It's very clear that the volumes have dried up. A lot of institutions have stepped up to the sideline. So I honestly just take it kind of one day at a time. I think ways that you can adapt to a bear market trading environment. So you just need to be very quick to adopt and catch on new trends. So bear markets, typically markets where there's a lot of opportunities to trade new trends, but there's also a lot of range bound stagnation. We're seeing a ton of range bound. We're also seeing like very momentum driven moves as well. I'd say like as a trader, you need to adapt to all the different market conditions and recognize whenever we're kind of switching a market regime or following a new trend. I'd say if you're scared of trading in the market, take it as like a time to learn more about the underlying technology. Most of these kind of altcoins, I'd say, have price action derived from some sort of token specific event. Like I was saying, like these altcoins still have tradable opportunities in some of these events. And just by understanding kind of the technology or the fundamentals or the token unlock schedules, you might have an edge kind of knowing how that information is going to impact the price action of a specific project. So I guess in terms of like things in a bear market I'd be cognizant of are there's still projects building on the side. There's still builders involved in the space. There are new tokens coming out every day. Still be aware of what technology is coming out in the bear market and like be cognizant of tradable opportunities there. I'd say that also, altcoins do have some beta to the Bitcoin and Ethereum markets as well. But there is definitely a lot of divergence caused by, like I said, all the massive events going on in the altcoins, whether that be like a DeFi exploit or a hack, strategic partnership, stuff like that. Yeah, so that's kind of my overview there. And I'd also say like I do use it as past tense a little bit, but it's just because it's been so hectic and chaotic. There are definitely tradable opportunities there. But I very much so focus on like the options and derivatives opportunities rather than the spot. And as a US client, US customer, I can't really access Deribit or some of these other like trading venues to trade options. So yeah.
So could you actually talk us through maybe a typical day in your life as a crypto derivatives trader at GSR?
Yeah. So I can kind of break it down. I'll break it down like I guess by time or days. Yeah, typical day. So I wake up usually around 6 a.m. I make like a quick breakfast, head over to the gym, work out. I get into work about 8 a.m. That's whenever my day kind of starts. So I'll catch up with coworkers overseas to see what happened during like the Singapore trading hours. I'll look at some news, scroll through Twitter, see if anything ecosystem specific has happened. Like I was talking about those altcoin specific events, read about some token news, look for some alpha on Telegram chats, things like that. I focus specifically a lot, like I said, on the derivatives and options space. I find it the most interesting. It's also something I do very much so day to day. We have like a trading catch-up call to figure out our overall view on the market, objectives for the day, recap some projects. That's around 10 a.m. After the meeting, I kind of just actually do day-to-day stuff. So I quote clients for spot and options trades, monitor our risk systems, note if anything seems out of whack. I run programmatic executions for clients, make some adjustments for bookings that might need to be amended, etc. I'd say around noon on certain days. So this is a very crypto native trader specific kind of thing. I'll quote DeFi option vaults. So we're a market maker that has partnerships and makes markets for a variety of different DeFi option vaults. I keep track of where these DeFi option vaults trade, trends in the specific DeFi altcoin like volatility market, and then any flow we win from the vaults, I will book and deploy like our automated hedging engines to kind of monetize that altcoin flow because there's not really a very liquid venue to kind of offload the risk of altcoin options. I take like a 30-minute break from work, go grab lunch, usually have it at my desk, but I can also just like step off the desk for 30 minutes to an hour, go get something around Midtown. And then while I'm doing that, I kind of scan through, like I said, Twitter and Telegram. Definitely the two biggest news sources for me for crypto, which is, kind of crazy to say that I look at Telegram and Twitter as part of my job as well. But I focus specifically on a lot of the crypto news and see what's happening midday. End of the day, I'd say I'm usually like on some catch-up calls with other members on different teams. So our operations team or our ventures team look through some DeFi specific articles to learn more about some of the, maybe DeFi specific primitives popping up or any new ecosystem news, anything like that. Finishing up my day, I'd say like I'll summarize what happened throughout the day for our team to be able to pass it on to our Asia-based trading team. Note any like interesting flow or interesting trades that's happened, 24 hours a week, stuff like that. I usually use like, intraday derivatives or Levitas, look at what's going on in the options market on that. They're like options data aggregators. See if there's any kind of interesting metrics to talk about, whether like there's a big shift in skew or there's any tradable opportunities in term structure. I think just kind of chat about the markets. Yeah. And then if there's any events in New York's great to be in. There's a lot of like crypto specific, crypto native events that go on up here. So if there's anything, I'll go to those with a coworker after work or something like that as well. Yeah.
Yeah, amazing. Busy. So at GSR, so there's kind of like two shifts globally almost. So like Asia and then Europe.
Kind of. So we actually have it's actually really nice. So we have a global based trading team, but we have 2 traders in Pacific Standard Time. We have 2 traders in New York, and then we have traders in Europe and traders in Singapore. So there's a lot of there's kind of like 3 shifts, but Europe's in the middle of both like the Singapore and the US. So yeah, it's kind of structured like that, but we'll pretty much have catch ups like US will come in and learn what happened overnight, and then Europe will get off and they'll hand off like what happened at like 3 a.m. or 4 a.m. Eastern to us and tell us what happened kind of early on as well.
Wow, awesome. Right. So it's funny you mentioned Twitter and Telegram as your sources of news. How can you make sure that, all the information you're getting is legit from these sources?
So I'd say that a lot of so the Telegram chats that I'm in, they're usually like with traders at other firms who have also kind of confirmed the information. So it's kind of like confirmation bias to see someone else post it and then see 5 other traders like see it as well and say like, oh, I actually talked to the guy. It's true. But then also a lot of the stuff I'm in, it's actually like Telegram chats that are made by like your CoinDesk or Glassnode or all these different data providers. And it's very hard to lie about data. Like in crypto, all the stuff is available to you on chain. A lot of it's very transparent. So if I'm looking at any sort of on chain stat and it's coming from like, CryptoQuant or Glassnode or something like that, I know that they're literally pulling the data from the API source on that exchange. So it's very different to kind of like, it's very hard to kind of forge data like that. I'd say that there's definitely a lot of stuff on Twitter. You just follow like the big guys on Twitter. Sometimes they're right, sometimes they're wrong, sometimes it's rumors, but a lot of the stuff about trading, a lot of things will sometimes trade on these rumors. And then honestly, recently, I've seen a lot of these rumors just end up becoming true anyway. It's like what they're saying is not actually a rumor, it's actually true. And that's kind of what happened with a lot of the FTX stuff like after the event. But yeah, it's very difficult to kind of, and that's the thing that I learned as well is in crypto, having this skill set of being able to filter out like the signal from the noise. There's so much noise in crypto. And I think it's so difficult to kind of develop that skill set that it's like a skill in and of itself, just because like the only way you'll know if something is, a good source to pull from, like how I know like CoinDesk, Glassnode, like all these different kind of reporting services and things like that are through my internship with people who've been in the industry for 3 or 4 years. There's not like, I don't think, there's like something you can Google and it just has like, okay, these are like the reputable media. I tried to create one of those for the club and sent that out to them, but it's very difficult to find that. So you kind of it's all word of mouth. And then once you figure out like who the big names are in the space, that's what I kind of follow and look at as well.
Awesome. So it's all just kind of DYOR, right? Yeah. Amazing. Yeah. So actually, you mentioned the kind of FTX news thing. So could you actually give us your views on that? What does that actually mean for the wider crypto community?
Yeah, definitely. So honestly, I think that the current market situation is quite poor. And a lot of the data kind of backs this thesis as well. So I think that there are definitely more things to be worried about than excited about heading into 2023. So short term, like, not financial advice, I'm skewed bearish or like a very range bound kind of trading environment, but I'd be more than happy to be proven wrong. I think heading into the holidays, we're going to see wide markets, poor liquidity, a lot of buy side flow is checked out for the year. A lot of the hedge funds, high net worth individuals. We're already seeing flows in the options market slowly start to pivot to more inter-dealer interactions between market makers, like who are, acting as the occasional taker, who are managing their views into the end of the year. But pretty much what that means is, a lot of buy-side flows kind of step back, and a lot of like the market makers are just managing their books towards the end of the year. That's actually cool because there's a statistic on Paradigm that kind of shows the growth over time of that inter-dealer flow activity on the OTC side of the options market. And then, yeah, so as a summary, it just shows like post FTX, that organic buy side taker demand from high net worth individuals, institutions, asset managers, it's kind of started to slow down heading into the end of the year. I think we're in a different market structure as well, where most of the big players on chain are starting to step back a little. So just taking a look at some of the on chain metrics I've seen on Glassnode and things like that, there's one you can look at. It's like size of transfers between whales versus smaller wallets, as well as like the average transfer size and the median transfer size. And we're kind of able to pick up that although institutions are slowly pulling back, retail flow is still there. I'd say in 2018, this was definitely a different market structure where retail was first in, first out. And I think having retail here to support these types of momentum-based trades and this FOMO-driven trade theses is good. But I do also think in a bear market, like retail is probably the first to go once they start seeing volumes dry up. There's no more opportunities. People have jobs. They don't want to day trade anymore, things like that. So if we don't see any positive catalysts like in the near term, or any interesting price action, I do think exchanges are probably going to start to see outflows. And then both retail and institutional traders would probably be on the sidelines until things get interesting. I would also say specifically after FTX, so with the collapse of FTX, I know there's a lot of distrust in the system. A lot of counterparties want to do they're less interested in bilateral trading and more so interested in trading under like these tri-party collateral agreements and things of that nature. So as a cool narrative into 2023, I do think institutional custody offerings are going to have a great opportunity to grow market share. I also think that the collapse of FTX, it's probably going to speed up. This might be good for institutions. It'll probably speed up like a clear and concise regulatory framework. And I think that with a clear and concise regulatory framework, that's going to bring on a new wave of institutional counterparties. And that's only positive for crypto. I do think a lot of the older narratives behind the fundamental crypto trades, using like the layer one rotation trades as an example, are going to be kind of seen as outdated. And I think we're going to see kind of more thesis driven trades centered around like these new crypto primitives, specific ecosystem developments, specific projects, those kind of things, rather than just like crypto as a whole. I think that we're going to start seeing like more people interested in specific projects than, okay, crypto is going up. People are going to want to start to pick out who the winners are in crypto, I think that I'd also say personally that there's an opportunity. This is personal opinion here, that I think opportunity for ETH to flip Bitcoin is something to maybe take note of in terms of market cap. We're seeing in the options market specifically, just some data that I've seen, that the open interest in Ethereum options has definitely grown to similar, if not greater levels than Bitcoin, specifically around some events and after some events post-merge. I think that with the added like tech narrative between like you can invest in the technology on Ethereum rather than the ultrasound money principle of Bitcoin, I think that also adds a little bit of fundamental value towards like an ETH driven trade. So now people can kind of just look at it also as a vehicle for investing in blockchain technology. And then also specifically going back to that, I think there are a lot of Bitcoin specific events that might drive selling pressure into 2023. So there's like the Mt. Gox kind of stuff, forced miner capitulation for Bitcoin. There's a lot of miners kind of stepping back now. The GBTC kind of stuff going on, the Bitfinex auctions, stuff like that. I got into crypto specifically for that technology and kind of the opportunity to see something new. I've always been a fan of ETH and kind of building an ecosystem over the ultrasound money principles of Bitcoin. But I do see definitely how Bitcoin kind of led that institutional adoption. And now I think there's an opportunity for ETH to kind of drive that narrative forward, especially with a lot of the other layer ones kind of starting to wind down a little bit, or developer activity starting to kind of fade away.
Awesome. Yeah. So you believe in the flippening?
Yeah, exactly.
Awesome. Good to know, although not financial advice. So, Chris, how are you personally planning on seeing this bear market through? And are there any signals that might suggest that it's coming to an end?
Yeah. So we talked a little bit about how kind of the characteristics of a bear market are like, trend, very much so range bound stagnation occasionally, but then also very quick to flip market regimes. And I think that that's something that people have to be very cognizant about. I'd say, unfortunately, as with every other asset class, it's very difficult to catch the bottom of the markets, especially with so many. This is specific to crypto. There's so many crypto native narratives that are driving the price action right now. There's the forced selling of miners, the DCG and Grayscale narrative, the exchange FUD, et cetera. There's a lot of negative news, and I think until all the bodies kind of float to the surface, I'm always going to be cognizant of kind of moves lower, just because, like I said in the beginning, I feel like there's a little bit more reason, unfortunately, to be kind of sad than happy right now, especially in the crypto markets. I'd say that the options market definitely mimics the view I'm taking as well. So if you have kind of a data-driven approach, if you look at some of the data for the Bitcoin and ETH, like the 25 delta, if you look at skew, so if you look at kind of the Bitcoin and ETH skew, you see that these 25 delta, these out of the money puts are trading 15 to 25 balls higher than the calls. So that means there's a lot more demand for kind of downside, or there's a lot of upside selling and volatility as well. And pretty much what that both kind of means is a bearish market view. I'd say interesting enough, though, like this is positive at least, is that in the options market, we're starting to see kind of like specific bullish flow start to pop up at least for the second half of 2023, though. So we're seeing some interest in like the 4K and the 6K strike Ethereum calls that are being sold as part of a call debit spread, which was kind of, I was talking about the strategies I take on as a retail trader to kind of enter into a directional view without paying a ton of money. So we're actually starting to see some bullish flows come in, but it's definitely set second half of 2023. So I think that there's a lot of people who are interested in seeing kind of, they're thinking that this may be the bottom, or they might think like Q1, Q2 might be a little bit rocky, but heading into Q3, Q4, people are starting to take on that kind of these like directionally bullish views, especially in Ethereum is what I've seen specifically in kind of like data-driven approach on some of these sources.
What do you think will be the biggest narratives of 2023?
Yeah, so I think that there were a lot of things last year that were either definitely half true or they came to light, but there were also a lot of different narratives that were definitely debunked or didn't really come to fruition. So I think one thing that immediately comes to my mind is definitely kind of like the bridges such as Wormhole. I think that there were definitely a few specific bridging hacks as well, but there are a lot of good projects and good technologies out there that I feel also don't need a token, or like you can see how you can invest in them, but I'm not sure why they would need a token. But I think that this next cycle is going to be very fundamentally driven, and people are going to start to understand, or are going to need to understand, where is value actually created and where is it coming from in crypto. I think we're going to start to see individual like decentralized applications and these projects start to accrue value, or we'll start to see kind of like how the investment in the price action and the layer one ecosystems like plays out as well. Whenever you start, it goes back to the narrative of choosing the individual project versus choosing the ecosystem. I think it's a lot more rewarding to figure out where value is accruing in that ecosystem, whether that be like a on-chain lending or decentralized order book or things like that, and then pick the winner in that specific kind of category. I'd say that how multi-chain are we going to be, kind of given that a lot of the layer ones have definitely been impacted by a lot of the situation right now. And then, like I said, bridges are a key component of a multi-chain system. I'd want to think about where VC investments are going to focus. Are users going to prioritize decentralization and privacy? Or are we going to see speed and lower fees as the main drivers of user adoption? Can we have both? Like I was talking about earlier, the flippening. So I think I said as well after the merge that there was a lot of increased options volume and open interest in ETH. And I think that the current market participants trading these options and volatility-based projects probably enjoy the elevated volatility in the ETH options. They typically trade at like a 15 or 20 point premium. Gives them a lot more opportunities to kind of trade there in terms of like a short vol trade. I also think that the type of investor that's staying in the space right now really believes in the technology aspect and the opportunities to support kind of like a thriving technological ecosystem. And that comes to kind of at least being exposed to Ethereum a little bit. So I'm not saying that there aren't other layer one opportunities that exist there, but in terms of like largest by market cap, Ethereum, obviously. And then I also think that we may slowly start to transition, like I said earlier, from some of these like layer one rotation trade narratives and look more into like the scalability solutions and opportunities with layer ones, ZK roll or layer twos, ZK rollups and things like Arbitrum and Optimism. I think there's always like data coming out on Twitter, and I don't have the full feed in front of me, but there's also like the percentage of transactions implemented through layer two solutions on Ethereum continues to grow. I think that oracles are probably going to need to continue to see some developments as well. There's a lot of protocol exploits relying on delayed oracle pricing. And then I also think at one point, some oracles are so centralized that they even stopped providing feeds for some assets. They got turned off at some point. I think the options market, kind of leaning on my experience there, options market is probably going to continue to grow as well. And I think that there's really going to be a lot of fuel to add to the fire, especially if we get the regulatory clarity that brings that new wave of institutions into the fray. Institutions like hedge fund, pension funds, asset managers, et cetera. They're all fans of the multifaceted kind of like portfolio tools that a robust and liquid options market can kind of provide. And I think if we get the regulatory clarity, those kind of institutions are going to be very much so attracted to crypto. And they're probably going to want to use options to kind of hedge their exposure there. In terms of like kind of a specific interesting like subtopic of I guess project investments I'm looking at. So I think that the order book style decentralized exchanges are the most likely like exchange swapping trading narrative that's going to continue to grow, especially with the most recent news and learning from what's happened after FTX. So people no longer should just trust centralized parties, I think. And I think that a strong DeFi protocol with a transparent like proof of reserves and transparency has an opportunity to continue to grow. There's a ton of volume increase in the decentralized exchanges post FTX. And I think that in the next bull market, we're going to continue to see that volume grow. So that's kind of the narratives that I'm focusing on in 2023.
Awesome. Actually, just a quick kind of side note on that. So you think more like the order book model is, would you say that's better than AMMs?
So I'm a trader and I enjoy the things that I know. And I know that the order book model for me specifically as a user, first of all, I'm like a lot more comfortable with it because it looks just like the stuff on Robinhood that any sort of retail participant would use. It's also very transparent in terms of kind of the depth, liquidity, and availability there. And then there's also like not too much opportunity for, I guess, like taking advantage of some of the intrinsic ways that these automated market makers are pricing things. It's all mathematical. It's all transparent in terms of how much liquidity is on the pool, stuff like that. Whereas like, I think there's also a lot more opportunities to get involved in a central limit order book model just because, like I said, that's what all the traders know. And I think GMX and DYDX are two specific projects that kind of do the CLOB as well.
Awesome. Yeah. Thank you so much. Right. Do you have any more kind of optimistic closing comments for us?
Okay, so I'd say that kind of if you're trading right now and you haven't blown up, you're probably doing something right. So whether you're skeptical of keeping risk on like a very centralized venue, you felt something off about heading into end of year events with a bunch of risk on, like the CPI, FOMC, stuff like that. Or maybe you're just lucky enough not to have been affected by these events. Maybe you just took a vacation like during FTX or something. I'd say that crypto as an industry kind of has waves like this. Everyone's very aware and cognizant of what goes on. And although I'd say that the most recent downwards kind of like bearish sentiment is driven by very, very different catalysts, we've been pushed into a bear market like nonetheless. And as uncertainty starts to clear up and we get more direction on the future regulation that kind of drives more institutional participants into the space, I'd say it's just something to ride out. Optimistically, though, I would say like the technology is not going away. So although prices may be down, the innovation that blockchain technology has kind of brought to the world still feels very bullish to me. So I would say don't give up on the innovation and the opportunities just because the price isn't as high as it used to be. Yeah.
That's amazing. Words of wisdom right there. Thank you so much for watching this episode. And if you enjoyed the content, don't forget to give us a like, comment, and subscribe. If you'd like to kind of try out anything that Christopher mentioned earlier, go to globe.exchange and I'll see you next time. Thanks, Chris. Bye.